Can Bitcoin survive a major stock market crash? It's one of the most debated questions in the world of finance today. As the global economy teeters on the edge of uncertainty, rising interest rates, mounting geopolitical tensions, and the constant fear of a financial meltdown, investors are wondering whether Bitcoin is the modern-day safe haven or just another speculative bubble waiting to burst. At first glance, Bitcoin seems like the perfect hedge. It's decentralized, immune to central bank manipulation, and has a fixed supply. Unlike fiat currencies that can be printed endlessly, there will only ever be 21 million Bitcoins. That scarcity is often compared to gold, which for centuries has served as a reliable store of value in times of crisis. But here's the catch: Bitcoin has only existed in an era of loose monetary policy and record-breaking stock market rallies. We've never truly seen how it behaves during a full-scale 2008-style financial crash. Let's take a look at history. In March 2020, when the COVID-19 pandemic triggered a sudden global market panic, stocks plummeted. And so did Bitcoin. In fact, Bitcoin lost over 50% of its value in just 2 days. That wasn't a sign of a safe haven. It was a sign that in times of extreme fear, even the most revolutionary assets are not immune. When investors panic, they don't look at fundamentals, they look for liquidity. They sell whatever they can. And Bitcoin, being one of the most liquid digital assets, was no exception. But here's where it gets interesting. While the initial shock saw Bitcoin crash alongside equities, it was also one of the fastest assets to recover. Within a few months, Bitcoin not only regained its value, it surged to new all-time highs. That rebound wasn't just driven by retail hype. It was fueled by institutional investors, hedge funds, corporations, and even sovereign wealth funds looking for alternative stores of value. For the first time, Bitcoin was seen not just as a risky tech play, but as a potential long-term asset in a diversified portfolio. So what happens if we face another crash, one worse than 2020? Will Bitcoin collapse again, or has it matured enough to stand apart from the rest of the market? The answer isn't simple. Bitcoin's fate in a stock market crash depends on multiple factors. First, the nature of the crash. If it's a liquidity-driven panic where everything is sold off, like in March 2020, then yes, Bitcoin will likely take a hit. But if the crash is the result of inflation fears, de-dollarization, or a collapse in trust in traditional financial systems, then Bitcoin might actually benefit. Because that's where its core value proposition lies, being a non-sovereign, trustless, borderless digital asset. There's also the matter of correlation. For much of its early history, Bitcoin was uncorrelated with stocks. But over time, as more traditional players entered the space, its correlation with risk assets has increased. This is a double-edged sword. On one hand, it shows maturity. On the other, it means Bitcoin may not offer the kind of protection investors seek in a true market meltdown. However, this correlation isn't static. In fact, it often spikes during periods of high stress and then fades when the dust settles. Psychology also plays a big role. Unlike gold, which has centuries of cultural trust built into it, Bitcoin is still in its teenage years. The belief in its long-term resilience is growing, but it's not universal. In a crisis, investor confidence can be fragile. Fear is contagious, but so is conviction. And Bitcoin has one of the most passionate and ideologically driven communities in finance. That's not something you can say about most assets. Let's not forget mining. Bitcoin's network security relies on miners being economically incentivized to maintain the blockchain. In a deep crash, if Bitcoin's price drops too low, mining profitability could suffer. Some miners may shut down, but the Bitcoin network is designed to adjust every 20-16 blocks. The difficulty changes to ensure block production remains steady. This self-healing mechanism is one of the reasons Bitcoin is still running perfectly more than a decade after its birth. And then there's regulation. In a financial crisis, governments often look for scapegoats or quick fixes. If Bitcoin becomes too powerful or starts behaving in a way that threatens fiat stability, it could face stricter regulatory crackdowns. But ironically, the very act of clamping down on Bitcoin could reinforce its core use case: freedom from centralized control. What about retail investors? In a crash, average investors often get hit the hardest. They panic sell. They need cash. That could mean a mass exodus from crypto. But this is also where Bitcoin's portability shines. Unlike stocks or real estate, Bitcoin can be moved instantly, globally, without a bank. In times of crisis, that's a powerful feature. Imagine a country facing capital controls or currency devaluation. Bitcoin becomes more than just an investment. It becomes a lifeline. The macro backdrop matters too. If central banks respond to a crash with more quantitative easing, more stimulus, and even negative interest rates, Bitcoin could shine. Why? Because people will seek alternatives. When trust in fiat erodes, hard assets thrive. That's been the case for centuries. The difference now is that Bitcoin offers the same kind of scarcity as gold, but with the speed of the internet. So can Bitcoin survive a major stock market crash? The most honest answer is yes, but not without pain. Bitcoin will likely drop in the short term, just like it did in 2020. Maybe even sharply. But its recovery might be stronger and faster than other assets. Not because it's invincible, but because it offers something fundamentally different. It's not just a tech investment. It's a statement. A bet against the flaws of the existing financial system. And that bet is becoming more popular every day. Bitcoin is no longer a fringe idea. It's being discussed in boardrooms, government hearings, and central bank white papers. Countries are exploring Bitcoin reserves. Institutions are adding it to balance sheets. ETFs have brought it to Wall Street. This kind of adoption doesn't make it immune to crashes, but it does make it harder to ignore. In a world where trust is fading and systems are cracking, Bitcoin is not a guaranteed safe haven, but it is a contender. One with a growing network, a fixed supply, and a story that resonates with an increasingly skeptical generation. So as the next crash looms, whether next month or next year, Bitcoin will face its biggest test yet. It will be volatile. It will be controversial. But it will survive. Because in a system built on debt, opacity, and central control, the idea of a decentralized, transparent, and finite asset has never been more relevant. The question isn't whether Bitcoin can survive a crash. The real question is, can the current financial system survive without an alternative like Bitcoin?